Welcome back everyone to another market update. I'm Philip here from BlackBull Markets. Hope you're all having a good week of trading. In this video I'll be taking you guys through some charts, showing you guys what our potential outlooks for the market are. We'll also be covering gold as well, which happened to move quite interestingly, happened to follow one of our analysis very nicely, and a couple of other charts also followed some analysis fairly nicely. So we'll be looking at previous moves and also be looking at potential moves for the future. So make sure you guys stick all the way through to the end of the video to see all the potential setups that we'll be looking for. And also make sure to smash that like button, guys, before we do dive into this video. Subscribe to the channel if you guys are interested in learning more about Forex and improving your trading skills. So without further ado, let's have a look at the charts and see what we've been offered. So looking at AUD USD, this is the 4-hourly term time frame. Might look a bit messy, but if you guys have watched our previous videos and remembered from our previous analysis, we're looking at sort of this uptrend. Also actually followed very nicely inside a channel. We then had a nice breakout to the downside, so roughly drawn channel over here. We had sort of this structure coming to the upside, market broke below it. We then saw a rejection on this internal support / resistance to push it further back down lower. Now this initial push to the upside was sort of incited by this 50% retracement of this previous move, so it gave us a nice push to the upside. And then, like I said, rejection on this internal support / resistance zones. I always speak about these when we do trade, when we do have traffic on the left. We saw a beautiful rejection there. Market then it happened to break out of this channel, this sort of flag pattern as well, to the downside, and has pushed all the way back down to that 76.4% retracement. One of the nice sort of levels we were looking at if the market was to continue further to the downside. Now remember, guys, we spoke about this channel, so definitely go check out those previous videos. But when we speak about these channels and when the market breaks out of these patterns, we tend to look for the breakout or the push outside of this pattern to come back all the way down to the sort of original start of this pattern. We saw that happen very beautifully right over here. We saw it really nicely rejecting. We saw nice wicks, and we got a nice sort of big engulfing candle close above, which is again another indication the market's ready to move further higher, and now has started to do so. We also have a bit of Elliott Wave in here. So let me quickly clear all these all these messy little bits off here so we can see a bit better. Get rid of that. I'll get rid of this channel as well. Just so we can see a bit better. So Elliott Wave wise over here, I can't quite completely see the structure of this wave to the upside, but it could potentially look like something like 1, 2. This wave will break a rule, so we could potentially look at 1, 2, a smaller third wave. I'll have to check out the Fibonacci's for this, but third wave, fourth, and an extended fifth wave could look anything like that. If not, our fifth wave, our third wave and our fourth wave could be over here. But what we're seeing over here is a nice A, B, C to the downside. So we're seeing a nice, beautiful A, B, C. So this could have potentially been either a wave 1, a wave 2, and now the market is ready to push further higher and create 5 waves to the upside. So this could indicate a very nice solid move to the upside. A couple of things we need to keep in mind as well. Now that we are moving further higher, again, we have internal support / resistance areas, right? Something that could happen as well, you know, if we are going to continue further higher in the uptrend, we could look for the market to reject up on here, push back down, create a bit of a head and shoulders, and then look to push further higher. If we do reject up on here and reject down here, we could also look at a couple of options. Obviously, we always need to look at what the market gives us. We're not here to predict what it says or predict what the market is going to do. We always just follow along as traders. We follow along to what the market gives us. So if we do reject down here, what I would be expecting would be for the market to consolidate in here, look for moves from zone A to zone B. But again, if it does break out further higher, we can take opportunities on that. If it breaks out back to the downside, again, further opportunities on that. It could very simply just break above with this current move, and then we can look for moves further high. Now, obviously, targets to the upside, we have that 0.74370 mark zone I've got here on our charts, so that could be a good target for this AUD USD. So currently, right now we're sitting in between zones. So if you guys are looking for any potential moves, personally, I would wait for one of these zones to be hit, and then we can start looking for either, you know, buys if it rejects, sells if it rejects, sells if it breaks, or buys if it breaks, right? So that's kind of the options we'll have on AUD USD. Another pair I'll be looking at, guys, Euro JPY. Want to have a quick look at that as well. We had a sort of a zone re-entry. Now, for me, when I trade head and shoulders, I don't actually care about the neckline at all. So if you guys know, a typical head and shoulders pattern looks something like this, right? There's a neckline, then there's your shoulder line. Now, I don't really care about where this neckline is. All I care about are my shoulders, okay? That's all I really care about, and that's kind of what we had over here, right? we can see the market came down, nice up and down, and created a little bit of a, you can see the neckline kind of matched up, not completely, but we had that nice zone re-entry, nice engulfing candle, market pushed further to the upside. So that's something that I've been really liking to trade. I really enjoy that sort of structure. But for the upcoming future for Euro JPY, this is the daily term time frame. Now we are approaching some key zones on the higher term time frames. So if we drop down to our, let's say, hourly time frame, we can start to see some candle rejections. We can maybe start to look for moves to the downside. Keep in mind, guys, we are still on the hourly time frame. We are still in the uptrend, so we need to be aware of that. So personally speaking, if I was to look for moves to the downside, I would look for shorter term moves coming back down to previous support / resistance zones. 130, I can't quite see what it says there. 129.970 mark zone is what we'll be looking at. If the market comes to the downside, we can look for something like a break and a retest to push further higher, because although we are on a daily resistance, we are still in an uptrend on this time frame. So we need to keep that in mind. It's always hard to trade against the trend, and it's a bit easier to trade with the trend. And it is also extremely difficult to pick tops and bottoms in the game. That's why we tend to see, you know, if you are a trader that picks tops and bottoms, your strategy will be a lot less accurate. You might have like a 30% accuracy trading. So you would have to have a very high risk reward ratio. Something like a 5-to-1 risk reward ratio would be something you'd have to look at. Okay. But if you're going to trade with the trend, you know, you can have, let's say, about 50%, anything from 50 to, I would say, if you're really good, 80% accuracy, right? So you can afford to have smaller risk reward ratios. I personally like to have a 3-to-1 risk reward ratio. I'm about just under 50% accurate. So I'm a bit of a swing trader, so I'm sitting about 48% accuracy, so I have a 3-to-1 risk reward ratio trade. I can play around with 2-to-1, but I prefer to have a 3-to-1. Gives me much better returns, and just a bit of a advice there for you guys on risk reward ratio stuff. Okay, so let's have a quick look. Another pair to look at is Gbp Jpy. This is the daily term time frame, and we are stuck in a nice zone on the higher term time frames, but this does create opportunity for us on our lower term time frames, right? So we'll quickly chart these out. Zone at the top, we've got a zone here at the bottom. I'm using this wide because we have this rejection right over here. Okay, so let's pop it over to the hourly term time frame. We can see we're again uptrending zone. And remember, Gbp Jpy, Euro JPY, similar sort of structure. So you guys can see there is still a bit of movement to the upside. So again, if you guys are going to trade against the trend, be expected to get stopped out a fair bit, right? Because we are trying to catch a big reversal, and we have to have the mentality and the mental strength to hold the position all the way back down, because we have to, as big, let's say, reversal traders, you have to be able to sit through stuff like this, right? You have to be able to sit through the market coming all the way, potentially all the way back into break even, and then pushing further higher, right? Or, you know, going back into your direction, or even, you know, as a trend trader or as a reversal trader, if we have zone to zone, you have to even be able for the market to come out, just miss you, perhaps maybe go halfway to your take profit target and stop you out. That's something you have to be able to handle in the market. Okay, that's something you have to have the mentally strength to be able to hold these trades, because we are looking for bigger, well, you are looking for bigger moves. You're looking for the major zone, top to bottom, you know, trend reversal trades. Okay, that's really what you're looking for. And obviously you'll be trading on something like a daily term time frame. You're looking for these big reversals. They're always hard to pick out, but when you do pick them out, your winners tend to be so large that you take out your small losses. Now that's if you follow your rules. Okay, it's very important to follow your rules. Okay, let's have a look at some of the analysis. We have a look here at gold. Gold has surprised us, but it's still followed our analysis. Now, guys, remember when I speak about certain zones we're in the market, I always talk about looking at both sides of the picture. We can't be one-minded. We can't have the blinds on and say the market's only going to go up, right? Because we're going to miss opportunities in trading. That's why I say I like to focus to make sure I follow what the market gives me, and I don't follow what I think the market's going to do. This is very important, okay, in any trading. So having a look here, gold. Now, if you guys have watched our previous videos, this is the hourly term time frame for gold. We saw this consolidation zone, market pushed, came just below. These are all-time highs, guys. Remember, someone came just below, popped back into this consolidation zone right over here, and then we started to have two options. Now, again, I was hoping that the market would continue, use this to push further higher, break that all-time high, which was something I would like to see. But again, the market didn't give it to us, so we had to look at other sides of the pictures. Like I said, we have this consolidation zone. I would have liked to see the market break up, but I was also open to the idea that the market could push further to the downside. We saw that happen. Market broke. We had a bit of a false breakout first, then we had a nice breakout over here. This would have been a fairly tricky one. I'll talk to you guys how we could have potentially taken this trade or not missed this move. So let's zoom in a bit. Let's have a look at that structure right over here. So this is kind of what we're looking at right now. Okay, so there's our consolidation zone, right? We had a false breakout. Okay, I don't like to trade just pure breakouts because the market tends to come and retest. Okay, so we saw market push back up again, and now we have to keep in mind we have this support / resistance zone, and we have this support / resistance zone right over here. I'll see if I can draw this accuracy as I possibly can. Okay, actually let me get a line on it so we can see it a bit better. So right there. Okay, there is that false breakout that we had initially. Okay, so how could we have traded this? Now, obviously, I will admit, I would have not have taken a trade here. Okay, I would not have taken a trade here on this break and retest because of this structure out of here. So where would I have gotten in? Okay, where did I get in? We can see this is that zone I was talking about. So the market went past it. We saw a big push, big rejection, and then we got a rejection right there when this great red candle closed, or even on this engulfing one. There's your entry. There's your stop loss, and then wherever your take profit has to be. Obviously, we spoke about take profit targets. If we do push to the downside, we need to look at support / resistance zones. We do have a couple coming up. So we had obviously this high, this resistance over here is a good target to go to. You can see right there, and then we also have this nice support playing out all the way down here, which is in that consolidation zone. You guys can see. Very nice clean moves to the downside for gold. Now it's time to reject. So again, we've got a couple of options. Personally for me, we are stuck in this consolidation zone right over here. So this for me, again, is not really a trade zone now. So I'm not going to look for any entries inside of the zone. I'd look for entries either above, reject, push higher. Or, we need to keep in mind as if we push high, we've got this bit of a troublesome zone to come in again. But obviously we know gold is... Well, what gold is, it will tend to always go to the upside. Eventually, we just need to figure out when. Okay, but that doesn't mean we can't get beautiful opportunities like this to the downside. Other option is break to the downside, similar rejection. Again, we have to look at both sides of the story. Okay, guys, so that's pretty much it for the analysis video, guys. If you have any charts you want to look at or want us to analyze, definitely leave it down in the comment section below. We'll be extremely happy to analyze the charts you guys want to see on your sort of or on your trades setups as well, guys. We'll be very happy to answer those. And like I said before, guys, if you did learn anything, feel free to smash that like button. We'll be happy if you do so. Subscribe to the channel to see more of our videos we will release. We'll also be looking at doing some quick psychology tips coming soon to the future as well to this channel, guys. So thanks so much for watching from everyone here at BlackBull Markets. As always, you know it, stay tuned, trade safe.